What's up everybody, welcome to the Stocks channel. My name is Cory and today was the final day of the Santa rally, so the question is where will the market go from here? So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, today SPY was up 0.77% and today was officially the last day of what is going to typically be called the Santa rally, which is the last 5 trading days of December into the first few trading days of the following year. So if we take a look at the chart, clearly we did see the Santa rally because we did close up only about 0.25% higher from the daily close of the Santa rally. Unless you did buy closer to the risk level, then you probably made somewhere around 1.5%. So either way, that is pretty typical to make about 1% during that period, but it is very clear that SPY is still stuck in a trading range, and even with the Santa rally, we have not broken out of this range. The range I'm referring to is going to be the support range between 378 and the resistance at 386. So when we ask the question, where are we going from here? There is a very good chance that we could resume the bear market. So first, I want to do a little bit of cleaning up and let's delete the arrow and let's take down the Christmas lights because anybody that still has their Christmas lights on is going to start being considered weird. So now that Christmas is off our chart, let's look forward to what's likely going to happen in January. And this is going to be a very simple market to trade. It is just going to take a lot of patience. The next leg in this market is either going to be the breakdown through this support zone at 378 or the breakout through this resistance zone, which is right around 386 up to about 387. If you just take a look at the 20 simple moving average, you can very clearly see that it's negatively sloping. So you could easily imagine in a bear market how we could get rejected from that negatively sloping 20 simple moving average, find that level as a resistance point, and then continue the sell-off with that breakdown through the support at 378. And that should easily be enough momentum to send us back down to about 364 or possibly even retest the 52-week closing lows at 356. Remember, this is a bear market, so it should be very easy to visualize that we could get rejected from resistance and make another leg lower. Now, in the opposite scenario, if we get the bull breakout, then we will be looking for that break above this 387 resistance zone, and then we could easily start to break through and go close that gap, which is going to be right around SPY 396. So in the bull scenario, we need to break through 387, and in the bear scenario, we need to break down through 378. And there will be enough meat on that bone to leave you a good trade in that direction with a much higher probability chance to be correct about the direction. Yes, you could go make a long trade right now using a risk level at 378, or you could go make a short trade right now using a risk level at 387. Just be aware that you need to manage a risk around those levels because the next breakout will likely be a large move in the market. So be prepared and know both scenarios, and whether you want to place your trade now in this trading range or wait for the breakout is completely up to you. Just make sure you're managing your risk. This is still a very volatile market and we're likely going to see a very large move once we get the breakout. So I do think you need to be preparing for that breakout now and make sure your trade plan is ready for either scenario. On the NASDAQ 100 triple Qs, we were up 0.48% today, and you can see the triple Qs are still maintaining that bounce off of the previous 52-week closing low of support at 260. Just like SPY, you need to use a critical risk level as a bull down here at 260, and your critical resistance level for you bears is going to be up here right around 271 to 274. If we start breaking above 274, we'll be looking for a run to 280 and then 283. And if we break down below 260, we'll be looking for 254 and then 250. So know the trading range because once we do get a breakout, we are likely going to see a very large move in the markets. You can clearly see this is still a strong bear trend, so the bias is still to the downward direction because you never want to go strongly against the trend. So if you are trying to get bullish, you need to manage your risk very tightly at this risk level at 260. On the Dow Jones, we were up 0.4% today, and the Dow Jones is already at critical resistance, which is this negatively sloping 20 daily moving average just below 334. This is going to be a very bullish breakout if we break above 334 because we should start heading back up to our price target at 341. But we won't have confirmation of that price target until we get the daily close above 334. We also have the gap fill, which is going to be resistance right around 337.6. The downside critical support levels will be 330 and 327, And if we break down below that, we will likely come down here to break down through 324 and go for that next leg lower at 319.5. On the Russell 2000 IWM ETF, we were up 1.25% today, and IWM is at very critical resistance in this trading range, which is going to be this resistance at 176. If we get rejected from 176 and break the support at 172, we should easily get down here to 166 and then 163. If we can break through the resistance at 176, we'll be looking for the next resistance at 178 and the gap fill just below 179. On the ARKK ETF, we were up 4.33% today, and ARKK is starting to maintain somewhat of a strong bounce from this support at $30, but we are still below some very critical resistance areas at 32.5 and 34.6. Above 32.5, we'll be looking for the gap fill at 34.42. And if we break down through the support at $30, we'll be looking for the next leg lower down here at 28.37. On the VIX, we were down 3.89% today as the VIX continues to get crushed every time it tries to break out above 23. And that is telling you the market is trying to consolidate and decide where the next move is going to be. VIX above 20 is still a volatile market, but it's going to be a lot more bullish if the VIX continues to crush down below 20, and a lot more bearish if the VIX spikes back out above 24. On Bitcoin, we're currently up about 1%, and Bitcoin is trying to get a bull breakout back over the 20 daily moving average, which is that resistance around 16,720. Above that, we're going for the next critical resistance at 17,550, and then above that, we'll be looking for a bull run up to about 19,000. Critical support will remain 16,000, and then if we break 16,000, our next leg lower will be 14,395. On Amazon stock, we were down 0.79%, and Amazon is very clearly finding resistance at this negatively sloping 20 daily moving average, which is that resistance zone right around 87. We're back down below a critical resistance at 86, which means we could get rejected and come all the way back down to retest the low at 81.5, or go for our next leg lower at $80 and then 77. The bull breakout above 87 could bring us back up to 91 and then 95, so look for that bull breakout if we do start breaking above that 20 daily moving average. On Microsoft stock, we were down 4.37% today, and Microsoft is one of those big tech laggards that is finally seeing selling because we did get the gap down and we did close the gap down there, which was right around 228. So with that being said, we did satisfy the downside price target in Microsoft stock, but we are still in a downtrend as long as we're below 242. We now have a gap to fill to the upside right here, right around 237, but we cannot get bullish even if we are taking a long trade for that gap fill until we can get back over 242 and then 245. In the event we continue lower, we'll be looking for support right around 225 and then 214. On Nvidia stock, we were up 3.03% today, and Nvidia continues to find support right here at this gap fill at 142, and we're back over the 5 EMA. We now have potential support at 146 and upside critical resistance at 153 and 156. If we can break over 156, we'll be looking for that next bull breakout, which could be the break above 160 to send us back up to 166. On Tesla stock, we were up 5.12% today, and if you have not seen my video on Tesla stock, there is very important weekly and monthly charts that I think will benefit you to pay attention to, and that should tell you why 107 is such a critical weekly support level. This is looking more and more bullish on Tesla the longer 107 holds up because we are getting high volume buying around this zone, which you can clearly see from the volume and the price action. Every time Tesla gets down towards 107, we start to see high volume buying, and the bears are failing to sell below that level. So Tesla at 107 is looking more and more likely that it is going to be a very critical support level, which means if it fails, we are going to see a very quick flush down to the next target at 94. Now that doesn't mean we will go to 94, but you will know likely if we start to break below 107, and it's likely going to move very quickly because this stock is easily moving double digits a day. Now from 107, we're looking for upside potential price targets at 116 and this gap fill at 120, and then strong daily resistance right around 123. If we clear 123, we should easily get back up to 138. And then from 138, we should see a lot of bears showing up and another very strong resistance level. On Apple stock, we were up 1.03% today, and Apple is trying to hold this support right around 126, but so far this is still looking like a very strong downtrend, and we are bearish in Apple as long as it's below 130 because we still have a valid downside price target on the weekly chart down here at 122. So Apple below 130 is likely heading to 122, with the price action confirmation being that breakdown below 126 and then 125. If we can break back over 130, we'll be looking for resistance at 133 and 135. The financial sector was up 1.6% today with the price action back above all of the moving averages, and the financials are looking very strong at these levels. The industrials were up 0.88% today, back over all of the moving averages, and look like they're well on their way to go fill the gap up there at $100. The healthcare sector was up 0.27% today, still looking relatively weak below this negatively sloping 20 simple moving average and resistance zone right around 137. The energy sector was flat for the day, going absolutely nowhere, but still holding up above this support at 82.6. If that support level fails, we could go down for that next leg lower. So jumping back over to the S&P 500, the Santa rally is officially over, and even though it was a very weak rally, the bulls are still holding above support, which means you bears need to wait for that support level to break down to get ready for that next leg lower. If you try to short at support or you try to short before support is broken, you can easily be caught on the wrong side of the trade, even if it's in a bear market. There's always going to be counter trend rallies at every bear market, so wait for those support levels to fail, and then you'll have a much higher chance to win that trade. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ, and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank Trade Alerts or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.